And the turbulence in technology stocks could move higher in the coming week as investors react to the quarterly report from Nvidia. The world's largest company by market value is at the heart of Wall Street's artificial intelligence rally. However, risk aversion sank market high flyers last week as hopes dimmed for a Federal Reserve cut next month. Fed policymakers are flying blind after the record longest U.S. government shutdown starved them of crucial data. Now, the uncertainty is testing the nerves of investors. In global markets, it was a sea of red last week, worsening a recent slump in cryptocurrencies. All major assets ended the week either flat or with big losses. The crypto engine is sputtering with Bitcoin and its peers enduring a violent unwinding that has shattered confidence. About $1 trillion has been wiped off the crypto markets. Bitcoin was the biggest loser, crashing over a 7% last week to trade just above $96,000, a 6-month low. The risk of bets boosted gold, with the yellow metal marking a nearly 2% rise to trade at more than $4,000. Brent crude prices rose nearly 1% to trade a touch above $64 a barrel as sanctions risk outweighed supply glut concerns. The dollar marked a modest fall with differing bets on the Fed rate path, moving the needle between gains and losses. Now shifting focus to the Asia-Pacific stock markets, Chinese stocks closed out in the red during a volatile week on weak economic data prints, suggesting any upside in limited. The OC index is in limited. The OC index closed 1.5% lower despite good job numbers, defying a broader sell-off in global markets. Bets for Indian stocks to hit fresh record highs are once again on the horizon. The Sensex ended the week 1.6% higher. Japanese stocks marked small gains for the week. In the Americas, the benchmark S&P 500 index ended a volatile few days, about flat on the week. Strength in the first 3 days yielded to a sell-off on Thursday. That comes as uncertainty about the economic outlook offsets optimism over the end of the longest ever U.S. government shutdown. The tech-heavy Nasdaq index tumbled 0.5%. Big tech stocks have stumbled this month on concerns that AI exuberance has driven up valuations to expensive levels. Defying the gloom, in the U.S., the Canadian benchmark index rose 1.4%. The Brazilian index closed the week with over 2% gains. Across the Atlantic, the story was completely different. All European benchmarks ended the week in the green. The French CAC led the gains in the region, closing out the week 2.8% higher. German DAX gained 1.3% despite the economic troubles in Europe's growth engine. UK's FTSE index showed a modest rise ahead of budget. The South African index ended with nearly 3% gains. Having looked at the market moves, let's now turn to the overall economic outlook. In Asia, India still remains the bright spot with momentum indicators pointing to a healthy speed of growth. Moody's is the latest to upgrade India's growth trajectory. Personal income and GST tax rate cuts are already boosting consumer spending. More positive numbers are expected from a trade deal with the U.S., which President Trump said is almost done. On the other hand, Chinese data shows momentum fading into the final stretch of the year. China's key activity indicators continue to slow across the board in October as policymakers appear to be delaying further policy support. Trump's trade rhetoric continues to weigh on the outlook for most of the other regional countries despite recent deals announced. In the Americas, the buzzword is uncertainty. Investors have stayed on edge and as they brace for a slew of economic data following the government's reopening after a record 43-day shutdown. Expectations are for a deep divide within the Fed, with bets fading for another rate cut next month. Markets now price in about a 40% chance of a December rate cut, down from about 90% earlier this month. The central bank is worried about driving in the fog from the lack of data. Elsewhere, the outlook for Brazil, Canada, and Argentina is still negative because of Trump's brinksmanship. In Europe, Florence or Frankfurt, every place in the region is seeking to push through much-needed reforms. Europe's growth engine, Germany, is still stuck in stagnation. It has taken a long time, but Berlin has finally recognized that the economy is facing not just a cyclical downturn, but a structural period of weaknesses. Now, 15 years of underinvestment, a lack of structural reforms, and China's emergence as a fierce competitor have eroded Germany's economic model. And finally, the German government has agreed on several measures that at least show a willingness to act, even if a bigger master plan is still lacking. UK continues to struggle to fill a budget black hole. The size of most economies in Europe are still well below the pre-COVID levels. European countries quickly need a clear, longer-term strategy and less wishful thinking with full pockets.